Please allow me to introduce the speaker for today. Our speaker for today is CY So Chuen Yen, to be well known as CY So. He's currently the excellent lead trainer, and he's also a chartered market technician, chartered holder, CMT. He's also a certified master trainer of NLP and also HRDF. He is also a performance coach with extensive experience in coaching individuals with performance improvement, behavioral change, self-empowerment, and personal breakthroughs. His specialties will be in training system and strategies, training psychologies, NLP, and also coaching. So without further ado, please allow me to pass it over to CY.
Now, today's topic is about understanding what are the key components you need in trading so that you can have a complete trading method that wins. And when it comes to trading, a very common discussion you hear most people commonly talk about is, about trading strategies. Where people most commonly talk about among friends, or a common interest group is, how to enter the market or how to exit the market. Which point should you enter and which point should you exit, right? These are the things that is commonly discussed. And you may notice that they spend most of their time and effort in searching for the best strategies. So, which I think is quite chasing. It's like, chasing a pot of gold at the end of the rainbow. While very few people are actually talking about some other key things that are equally important in trading as well, such as risk management, money management, and even trading psychology. So I believe today some of you here have a couple of years of trading experiences, and today's session would be something you have already know about. So in this session, you may have a quick revision and refresh your knowledge. While for some of you here are just beginner who are just starting your trading journey, especially in futures trading. So today's session would be something new to you. And when you understand today's topic, you can actually avoid lots of unnecessary trading mistakes and even accelerate your learning curve in trading. And regardless of what background or trading experience you are coming from, or what trading style you are using, you can still improve further in your trading skills. And in trading, it doesn't really matter if you have the best trading strategies. So later in the next few topics, I will explain it to you why, even though you may already have a good trading strategy, yet you are still unable to generate a consistent profit. So do you face a similar thing as well? And whether does it sound familiar to you? If you face the same thing as well, you can type in yes in the chat box so that you let other participants in this room here know that it is not an unusual problem, because each and every one of us who begin in trading, each and every one of us, we face the same problem as well. So you are not alone, because everyone would face the same thing too. So if you face the same problem, that's because you are missing some of the important ingredients and key components in your trading. So stay tuned till the end of this session, as you will understand what are the key things you need to make your trading method more comprehensive as well as complete. So let's get started. A quick standard disclaimer here. I give you a quick 5 seconds to look through, as this presentation is for educational purpose only, to give you a quick understanding and to widen your horizon and exposure about knowledge in trading. And you still need to study in detail and develop effective trading methods that suits you. I believe Ting Ting has already introduced me. My name is CY, and I have been, studying in trading for quite a couple of years already. So in this webinar, I will be organizing it into 4 topics. And in fact, these 4 topics are quite the essence of trading already, okay? Because even though, you know, read across different kinds of books, even websites or different reading materials, it may be, you know, boiled down to these 4 key topics. So the first topic, the 5 key components of a complete trading method. I will start with the foundation first so that you can understand the importance of having these 5 key components in trading. Next, I will share with you the 3 key decisions you need to make in trading. And when it comes to making decisions, many traders get confused and even overthinking about what kind of decisions they need to make. So trading futures is actually about, you know, making these 3 decisions only. And there are a lot of decisions for you to make in trading. But in futures, you can actually simplify your 3 decisions into these few things. And I will explain it to you in detail later. Topic 3, the challenges and obstacles in trading. This is very important. When you are able to identify the challenges and obstacles that you are facing, only then you are able to, you know, take the necessary actions to solve your problem so that you can trade with more confidence. And lastly, I will share with you how to develop an effective approach to win in trading. I will share with you some suggestions on how you can put all of the pieces together to make your trading method more robust and workable in trading. So you need to listen topic 1 to topic 3 attentively, okay? Now, before we begin, I would like to ask you a question. Is your trading method a winning method or not? Do you know whether your trading method is a winning method or not? Meaning, if you continually use the same method to trade over again and again for the next few years, are you confident that your method can help you make money from the futures market over the long run? Okay, if you believe you can win in futures, it's a winning method that is profitable over the long run, you can type in yes in the chat box. If you don't believe it can be a profitable method, you can type in no in the chat box, so that, you know, at least you acknowledge yourself that you are aware you need to make a little bit more improvise and to revise your method a little bit. Okay, so I see some of you has already typed in the chat box. Very interesting uh, response that I see from you. Some of you put not yet, some of you in progress, and some of you no. Well, it's fine because you know, when it comes to trading, it's I would say it's a continual learning process. It's also a work in progress thing, because we want to trade. If you're interested in trading, you would want to trade throughout your lifetime, right? So this is where trading is actually quite an interesting thing, whereby you know, one common word I would hear from veterans is that you can never you know, retire from trading, because you breathe in and out, and you live with trading until the end of your day. Okay, and the next question that I would like to ask you is that, do you know what are the important things in trading or not? So if you know what things is important, you can type in the chat box, so that you can share your opinion to, you know, other participants to see, you know, what are the things that is important, at least in trading for you. Okay, you know, it can be technical analysis, fundamental analysis, trading strategy, or trading system, and anything that you believe is important, you can type in the chat box. Okay, because it's quite interesting when it comes to trading. I do hear a lot of different kinds of answers. Some of the answers, which also includes, you know, some people would think trading software is important. Some people would say broker is important. Some would even say having, you know, multiple screens, 3 and 4 screens right in front of you would actually make you trade even better. So you can see a lot of answers going on. And don't worry about this, there's no right or wrong answer. And later, throughout this webinar, hopefully you will gain some new insights about how to improve your trading and what are the things you need to prepare yourself in order to trade successfully. Okay, so I do see some interesting words in the chat box. Some of you might even say luck, some would say repeatable process. It's true and important. Now, let's begin with our first topic. Now, the 5 key components of a complete trading method. When you understand the importance of having these 5 key components and work on improving these 5 things, then trading would be easier and more comfortable for you. Many traders who are unable to achieve a consistent result in trading, they just only have 1 or 2 components only. So maybe you are facing the same situation as well. Now, let's have a look. In trading, generally, I believe you know this very well already, right? Generally, there are 2 major schools of analysis. I believe this is something you know very well, which is one school is fundamental analysis, while the other is technical analysis. So fundamental analysis analyze on the economic, analyzing the industry, financial, on the company. Simply speaking, fundamental analysis is actually analyzing about the quality of the information, while technical analysis mainly uses price, volume, chart patterns, indicators to analyze the market. So you can type in the chat box and let me know which of these analysis that you are currently using in trading. So if you use technical analysis only, you can type in TA. If you use FA only, you can type in FA. If you use both, you can put in both. Sometimes if you do not know which answer to choose, whether is it TA or FA, maybe you are from the third school of analysis, which is just tossing a coin, that kind of analysis to get a 50-50 answer whether to trade or getting in or getting out of the market. Now, I believe for most of you, more or less, you have an answer in your mind already, right? Which type of analysis is easier to use for trading, and which type of analysis makes a little bit more money. So I am not going to say which of these analysis is superior or which is better. In fact, whether is it, I'm also not going to say whether is it FA better than TA or whether TA is better than FA. And I am also not able to comment which analysis makes more money, because as time goes by, as you gain more experiences, trading experiences, you will realize that both TA and FA are quite unique by itself. Both of them provides a different kind of information about the market that can let you see a different perspective from different sides of the market. And in trading and investing, many people have spent a lot of time and resources in learning FA or even TA, and they put lots of effort, years and years in learning these 2 things, which is a good thing, because analysis itself is the backbone of making decisions, right? Analysis is definitely a prerequisite, but somehow or some way, despite of spending so much time in doing analysis, they are unable to reach a decision whether to buy or whether to sell. Sounds familiar to you, right? When you spend too much time in looking charts and even reading news, reading reports, you may still find it difficult in making decisions. So don't worry about this. Because what I'm going to share with you in the next few slides are very important. So listen to this attentively. And if you want to take notes or have a screenshot, do so as well. Now, in fact, analysis, you need to know this thing is that analysis does not equals to trading, okay? If you read books about analysis, economic analysis, financial analysis, or technical analysis, very hardly they actually mention about trading, because analysis does not always equal to trading, because even though you have knowledge, a rich knowledge in technical analysis or even fundamental analysis, it does not necessarily mean that you are able to trade or being profitable in trading for the long run. You can be very skillful, in conducting research or doing analysis, and yet still unable to trade, because trading is entirely completely a new domain, right? It requires a separate different set of skills. Here you can clearly see that analysis only plays a part in trading skills. So fundamental analysis and technical analysis are just only your analysis tool in trading. You would still need trading strategy. You should still need to have risk management, money management, as well as have a good trading psychology to complete your trading method. So if you're still unable to perform well in trading, you may be still stuck in just only finding the best analysis, the best strategy. In fact, you may be still lacking one of or many of these 5 areas in trading that you need to equip yourself. So what you need to do is make sure your trading method has all of these 5 things on the right hand side. Okay, the analysis tools, your trading strategy, risk management, money management, as well as trading psychology. Now let me share with you an analogy, okay, just a metaphor about trading. Trading is just like flying a plane. So in a plane there are these 5 main things that you actually need, which actually represents your 5 key components of your trading method. Okay, so the first one is, of course, is your plane parts, your analysis tools. You need to have all of the important tools in order to build a functional plane. So you have many pieces about information about the market. So which is why you want to do your analysis, right? Whether is it technical analysis or fundamental analysis, you take all the pieces together to make an opinion, to develop a hypothesis about the market. So you analyze it. And the next important thing is knowing what are you going to do with having all of this information. So the next thing you need to have is your navigation. So navigation in trading is just like your trading strategy. When you are up in the air, right, you need a navigation tool to show you where to go, what actions to take in your trading, whether is it to buy or sell, whether to go for a long position or a short position in the market. So without navigation and strategy to fly a plane, you can crash your plane very fast. Okay, without navigation in trading, you would be clueless, which I believe you may have experienced it emotionally and psychologically yourself, right? Without navigation, you are clueless. And the same thing applies to trading. Without a trading strategy, you are unable to navigate the market and make important trading decisions, whether to get in the market or get out from the market. Now, when you have a trading strategy, the next thing you need to have is your emergency control. You have navigation, you still need navigation, your emergency control, which is your risk management in trading. So when things go wrong with your plane, do you know what are the things you need to do to keep your plane safe or not? Same thing goes in trading. When things go wrong, you need to know how to take the necessary actions to keep your money safe. The next thing you need, which is your field, just like money management, the field is just like your money in trading. Majority of the traders, especially beginners, and for those of you who might be in the market for quite some time already, who haven't achieved the consistent positive results in trading yet, they always want to use little money to trade the market with a hope to make big money from trading. I believe a lot of you might have this same kind of belief as well. You wish to use as little money to trade with a hope to make big money from trading. In fact, this is actually quite dangerous, okay? Contrarily, this is actually quite dangerous because it's like flying your plane with very, very little fuel. And I believe a lot of traders make this mistake, and maybe you are still unaware of this. So today you know this, okay? Money management is very important. Having enough, or it's best to have more money to trade. Later on, I'm going to share with you why. And lastly, the most important thing of all, can you guess what is that? Out of these four components, which is the pilot itself, okay, which is you. Of course, nowadays you can go for autopilot, right? Same thing with trading. You can go for algo trading. You can let the computer to do things for you. But ultimately, it still goes to the pilot, which is you as a trader. This includes your trading psychology, your knowledge, your decision making, your discipline, as well as managing your emotions. And there are many other factors that is your includes your trading psychology. If you, as a pilot, detect that any parts of your plane got any problems, for example, problems with your navigation system, or maybe you don't have enough of fuel, or you don't have emergency control, then you need to decide whether to fly your plane or not at all, because it would be dangerous and risky, right? So it's important for you as a pilot, as a trader, to check everything is in place and right in order before you take flight, before you trade your money in order to reach your destination. Now, to put it in simple words, this is where you are right now. And if you want to reach your goals, you need to make sure that you have all of these five key components. Your analysis tool, your trading strategy, your risk management, your money management, as well as a trading psychology. For those of you who did not succeed in trading, or maybe you have, in early stages, you have been making a lot of money in trading, maybe experienced things already. You take flight already, you think you are on the sky already, and a lot of people take flight without checking if they have satisfied these five key components or not. They start flying in the air and maybe in the beginning or halfway already crash landing. So I believe you do not want this thing to happen to you, right? So you want to make sure that you are well equipped with all of these five key components. Learn how to fly low first, and then only you fly high. And because reaching your goal is just only a matter of time in trading. So remember, you must have these five key components: your analysis tool, your trading strategy, risk management, money management, and your trading psychology to make your trading method complete, a complete trading system. Now, the next topic would be on the three key decisions in trading. Now that you have already understand that it's important to have the complete five key components in trading. In this topic, I'm going to share with you with the three key decisions in trading. As you know that the purpose of doing any kind of analysis ultimately is about making trading decisions. If you are unable to make decisions in trading, you may be either missing a lot of opportunities or risking your money in holding positions for too long. So this can be overthinking too much, or maybe having analysis paralysis, or even overwhelmed with too much information that you do not know what to do next. So if you are trading the futures market, then I would say you're considered lucky, right? Because unlike trading the stock market, because in Bursa Malaysia itself, we have approximately 1,000 stocks, so many stocks to choose and so many things to analyze. And good thing about a Malaysia futures market is that there are just a number of derivative products for you to trade. We have FKLI, FM70, FCPO, FEPO, and FGLD. And trading the futures market has a lot of benefits, like you have leverage, you can trade both market directions, and many more benefits in trading futures. Now, do you know what are the decisions you need to make in your trading or not? Because if you know your decisions that you need to make in trading, you can type the answer in the chat box. Later on, I am going to review the answer to you, and I'm also going to highlight why each of these decisions are difficult to make in trading. Because of course, although when it comes to trading, only three decisions, but these three decisions, it can be easy and it can be tough as well. But once you have your trading strategies, once you have your analysis tools in place, you can make these decisions very easily. Okay. So I see some of you put trading plans, some calculating the risk, when to enter, when to exit, when to quit, stop loss exit plan, trading plan. Okay, trading plan in fact is not a decision, okay, because trading plan is still at the planning stage only. Later on, now I'm going to share with you what are these three decisions. There are only three decisions you need to do in trading. Of course, before you come to any of these three decisions, you will have your analysis first, right? Whether to use technical analysis to analyze or fundamental analysis to analyze the market is fine. What you need to do in trading is only to make these three decisions, whether to enter, exit, or even do nothing. With a trading strategy, you can make these three decisions in trading. Okay, if you are still encountering difficulties in making decision in trading, that's because you don't have a well-defined trading strategy, or you don't have a clear trading strategy. Okay, when you know how to make these three decisions precisely and clearly without any hesitation, it means you have fulfilled the criteria of already having a good trading discipline. So if you are unable to make any of these three decisions, or you still get stuck, it means you need to pay attention on improving in this area, especially on your trading strategy, because this will directly affect your trading results as well as your performance over the long run. Now let's go through with the first thing, why making decisions is very difficult. A while ago, I have asked you about which analysis you use in your trading, right? Whether is it technical analysis and fundamental analysis. Whichever analysis you use, you will encounter with these four major challenges. The first one would be if you don't have sufficient knowledge, it's difficult for you to use that particular knowledge, for example, technical analysis, to analyze the market. If you have too much information to process, it's also difficult for you to analyze whether it is a technical data or even fundamental data. It's difficult for you to analyze as well. And of course, lastly, if you have a lot of information or even too little information, you might be spending too much time in reading news reports and even looking at charts, and you still haven't come to a conclusion yet. Now, remember this very important thing about trading is that the purpose of doing any analysis is for you to make an informed trading decisions. If you get stuck too long in analysis and still haven't gotten into a conclusive answer yet, then you will miss a lot of trading opportunities, even risking having positions in the market for too long. Because the market, whether it's the stock market or futures market, the market is constantly moving. It is dynamic. So if you get stuck in your analysis for too long, you may be too slow in responding to new information that's coming in. So it's important that you are able to make an informed decisions. You need to be quick and firm in making your decisions in trading. Now let's go through with these three decisions, which is your entry, your exit, as well as do nothing. Now, the first one, which is your entry. One of the famous quote in English, especially by William Shakespeare, is "To be or not to be, that is the question." So what it means is that to do something or not to do something, that is the question. So this quote is commonly used as an expression for a person's indecision or hesitation about doing something or making a decision. So it means that you are hesitant or worried about making a decision. You may be thinking that whether if you should buy or whether you should sell in the market. Now, what happens if the price comes down suddenly or rebound it back? So to be able to make a firm entry decision, what you need is actually to have an entry system, okay, or the entry criteria. You need to know what are the criteria for you to enter, when to enter, and how many contracts that you need to enter. So for example, what criteria that need to satisfy in order for you to enter a long position, to make a buy decision. For example, if your criteria can be from technical analysis or fundamental analysis or even both. Okay, whether the news is a good or positive, whether is it good data coming up, whether is it a good economy, whether is it price breaking the major resistance level, or price patterns or indicators that supports your decision to go long or buy the market. Okay, so with this criteria, you will know exactly when you will need to enter the market. And of course, how many contracts to enter the market, this has got to do a little bit with your money management. And later on, I will be going to share with you how many contracts to buy as a beginner trader is not so much of importance yet, because all you need to do is you need to start small first, okay? Start uh, being profitable in trading consistently for a period of time with one contract first, and slowly you increase to 2 contracts, 3 contracts, and so on. So later on, when it comes to the money management section, I will highlight to you what are the things that is important in money management. So here in the entry system, it also consists all of your signals. You have to define what is your buy signals. In fact, your entry system and your exit system, okay, work actually quite hand in hand, right? Because in futures market, your entry of long position is actually your exit of your short position. Okay, so likewise, your entry for your short position would be also equivalent to your exit for your long position. So because in futures market, you can trade both ways. Now, your trading method may have only one entry signal, or you may have multiple entry signal. That's fine. Now, let's look at the exit decision. The next decision you need is actually exiting the market, because especially if you have a position in hand, you need to make an exit decision. So entering the market is just the beginning only. You need to be able to exit the market as well. Whether to take profit or cut loss if you're actually wrong about the trade. So for exit decision, you need to have an exit system. So for example, same thing, you need to know what are the criteria that need to satisfy in order for you to exit your position. And again, these criteria can be from technical analysis or fundamental analysis or both. When the trend changes, when the market sentiment change, or whether there is a changes in demand and supply, or changes in the market economy condition, then what would be your exit strategy? Now, the exit system could be the most critical part of your entire system. Okay, entry, because entry of the market is actually just the beginning only. Your entry system is just only one decision. You can either enter the market only, right, or you don't have position at all. However, the exit system has a little bit hard job here, because either your whole position by continually, especially if you're for a trading position, right? Each and every single day, you have to make this exit decision, whether to stay in your position or whether to get out. So each and every day, the odds in the market changes, the market condition change. You need to decide how much profit is actually at risk for you, how much potential that is still left in the trade that you want to hold the position moving forward. And these questions are complex, and it require a great deal of part on your side, because simply speaking, it's about how much profit to take or how much losses to cut. And more than an exit strategy is more important than I believe it's more than any other component in the trading system, because your exit system will determine if you have a winning system. A lot of people focus on entering the market only, and they neglect of how to get out of the market. So it's important also for you to consider how to exit the market. So simply speaking, how to could develop your exit strategy is that you need to follow these two principles. Very simple. Is that when you design your exit system, you need, number one is you need to let your profits run, which means as long as the market is still trending in the direction of your trade, you just leave it alone, you do nothing. And if the trend started to change, you need to prepare to get out fast. And the next thing you need to do is, if you're wrong, you need to cut your losses short and get out from the market. Now, the third decision, which I believe is the toughest among of all decisions, is actually do nothing. If your entry system or your exit system do not have any trigger, so your decision, you need to also make a decision to do nothing, okay? Completely do nothing. You need to decide on that, because a lot of traders, their hands are itchy, because when there is no signal to enter or signal to exit, they have the temptation to to enter the market or take profit from the market, because they fear of missing out opportunities. So same thing, whenever there's profit, they want to take profit early because they're afraid that the profit would evaporate. Now, just a few quotes here about patience is that doing nothing is not easy, because it requires you to develop the necessary patience. So you need to wait for the trend to develop, and you need the time to ride on the trend. So trend takes time to develop. So this is number one thing that you need to understand. Trend takes time to develop. It can be a small trend or it can be a big trend. You just need to be patient with it. Okay, you need to be patient with it. So how do you develop patience is that we go back to the first two decisions. Your entry system and your exit system, you need to have a trading checklist for both your entry as well as your exit system. Whenever you feel itchy or having the temptation to trade, you need to go through your checklist. So if you're not quite sure what to do, all you need to do is, again, go through your checklist. And from my personal experience, from time to time, I also do have urges, and itchiness to trade as well. And it is actually going through the checklist that I managed to develop the necessary trading discipline. So it's okay to feel itchy at times throughout the whole day, especially when the market is opening, right? It can be, in a single day, you may have the itch or the temptation to trade. Can be 10 times or 20 times in a single day. Then all you need to do again is go back to your trading checklist, go through your trading checklist 10 times, 20 times. So, okay, until you are able to develop the discipline. And maybe sometimes, yeah, you might be thinking, okay, the market has opportunity to trade, or your intuition tells you that the market may have opportunity here and there. Again, all you need to do, please always go through your training checklist, and so that you don't miss any of those things, okay? Now, let me summarize this topic too, is that, in short, you only need to make these three big decisions in trading: your entry, your exit, as well as do nothing. Now, a word of advice is that, never ever follow, okay, never ever follow other people's entry system. Okay, never ever follow other people's entry system, which includes rumors, insiders, and any other things, other people's entry system, because you do not know how to get out from those trades. You know how to get in, but you do not know how to get out, and you also do not know other people's exit system. Okay, so if you follow the first time, you may win. Follow the second time, you may make some money, but you can't win over the long run by just following other people's entry method. Okay, so it's important for you to develop your own entry as well as your own exit system, and always trade accordingly to your own trading plan. Now, the third topic here is very important. When you are able to identify what are your trading challenges and obstacles in trading, then you will be able to take the necessary actions to find out what solutions that you actually need to solve your trading problems, so that you can trade with confidence. You can also become profitable in trading. So in this chapter, do identify what are your trading challenges as well as your obstacles in trading. Now, the first thing, of course, for every new beginners or every person who comes into trading, number one is actually, of course, you know already, no strategy. Because not having a strategy, it's if you don't have any trading strategy, if you don't have a navigation system like flying a plane, you are actually flying blindly. You would be trading blindly, and it's very, very dangerous. So the probability for you to crash your plane and lose money is actually very, very high. So number one thing you need to trade, if you want to trade, you need to make sure that you have a trading strategy and a trading system. Now, number two is that once you have your navigation in trading, once you have a trading strategies, you need to test it out. A lot of traders don't test out their strategy. They just copy and paste other people's strategy without having understanding at all. You need to test out your trading strategy to see whether it works profitably or whether the strategy sounds nice, but it is actually a lousy strategy. So you should actually abandon lousy strategy and only use good strategy. So being a trader is like being a professional pilot. You need to go through flight simulation. So in the same thing in trading, you have your trading simulation, right? Now you can see in this picture, does anybody know this flight simulator place in Malaysia or not? So if you know this place already, you can type in the chat box. If you don't know, it's fine. You can, if you come to KL, you may actually, come and have a look, or even, try and experience yourself. In fact, this flight simulator place is actually, you can find it in Pavilion, KL. Now, back to our main topic discussion is that, it's important you have a strategy, and then the next thing you need to have is to do your back testing. Many traders don't do back testing or do any trading simulation or even paper trade to test out whether their trading strategy works or not. They immediately do their trading. So if they make some money, they trade even bigger by placing two big positions, and then ended up blow up their trading account very fast when things go wrong. So same thing as a pilot, you need to learn how to do flight simulation first, fly at different types of altitude, and then slowly increase the challenge from that. So it's important for you to test out what is your trading strategy first through back testing, through paper trading, to experiment out whether your strategy works or not. So number one thing, you need to familiarize with your trading strategy first before you put in real money for trading. So same thing like being a professional pilot, you need to be comfortable and familiarized with your plane first before you actually fly a real plane. Otherwise, you can crash your plane or even lose money in trading very easily. Okay. Now, the third thing, of course, it's obstacle is not having a risk management method in trading. Having less profit, or when your profit evaporates in trading, it's fine. Okay, it won't kill you. But if you don't manage your risk, this is very, very risky. Because what kills most trader is not because they make less money or if their profit evaporates. What kills most trader is that they don't know how to limit their losses. They let their losses to roll bigger and bigger until they get margin call. So it's important for you to be able to cut your losses short. And of course, mention about cutting losses. Let me share with you briefly these three general approach of cutting losses. Okay, very simple. The first one is you can cut your losses in terms of dollar. So for example, if you lose a fixed amount of money, like for example, if you lose $1,000, you cut your losses and you get out from the trade. Okay, this is a fixed by dollar approach. The second cut loss method is actually by percentage. Now, if you lose, for example, if you lose 10% of your trading capital, you can cut your losses short and then get out from the trade. And the last method of cutting losses would be actually based on the price level, okay, especially for those who you do use technical analysis to trade. For example, if the price reach a certain or a specific level, you just get out. Or if your indicator shows you an exit signal, you just get out from it. Now, you might be the next question I believe you might have for me is that, how much to cut loss, right? In fact, I am unable to give you an exact answer directly because it depends on how much money you are willing to lose, how much money that you have in your trading account. And it also depends your trading strategy. Some trading strategy cut loss a lot. Some trading strategy has little tolerance for cutting losses, okay? And there are also other many factors to consider. Now, one thing about understanding about the losses in trading is that this slide is very, very important, okay? Please listen to this very carefully. How much you need to recover in terms your losses. Risk management is very, very important because if you lose too big, it's hard for you to recover your losses. So how to read this table is that, okay, here you can see that it's the percentage of losses. So for example, if you lose 5% of your trading capital, it means you need to have 5.3% of profit in terms to cover back all of your previous losses. The second row would be if you lose 10% of your trading capital, you need 11% to recover of profit to recover your losses. And let's say we go to 50%. If you lose 50% of your trading capital, you need 100% of profit. It can be a single trade or multiples of trade. Okay, in total, you need to have 100% of profit in order to recover back all of your previous losses. So simply speaking, here is that how you read this table is that the more losses that you actually suffer in terms of your trading, you need to have a very high return of profits in order to recover back all of your losses. And here, one important lesson you need to know is that it is not realistic to expect the market oftentimes to provide a good opportunity or having a big trend for you to recover your losses. So which is why when it comes to trading, never ever lose too big that is really difficult to recover your losses. If your losses is too big, it is really, really difficult to recover your losses. And it's also very unreasonable and not realistic to expect to make 100%, 200 and 400% from the market just to recover your losses. So whenever it comes to trading, it's always important to be prudent, to be conservative and protect your money. Okay, so as one of the common quote by Warren Buffett is that the first rule is never ever lose money, and the second rule I believe you might have already is that first rule number 2 is actually to first follow back rule number 1, never ever lose money. So from this quote, what it actually means is that it clearly highlights out the importance of this slide as well. Okay, so cutting losses is very, very important for as a trader, as well as even if you're ever investing in the stock market. It's important for you to cut your losses short so that you are able to survive in the market. Now, the fourth challenges and obstacle is, of course, is no money management. Many traders expect to use too little money in terms of your trading account to trade. So remember that you are actually trading the futures account. It's entirely different from trading stocks. In stocks, you don't have margin call. Okay, if you don't use margin facility, you don't have margin call in stocks. But in futures, because you are trading a standardized futures contract, your profit and loss goes by the contract specification. If you have too little money or insufficient money in your trading account, This will result with a high risk of margin call if the market direction is actually against your trade. You need to make sure you have more than sufficient money in your futures trading account. So of course, the minimum contract or minimum lot size for you to enter a futures contract is actually one contract lot, right? There is no such thing as a 0.5 contract or 0.1 contract. The minimum size for a contract is actually one lot. So you need to make sure that you have sufficient money or more than sufficient money in your futures trading account so that you can be a little bit comfortable in terms of trading. You will not meet margin call that easily. Why money management is important is because trading is like doing any physical business. You need to have more than enough capital to go through tough times. Okay, trading is like doing any business, normal business, right? There are times you make a lot of money. There are times your business is so. There are times, for example, if in a rainy day your business is just not good. So you need to have more than enough capital to go through tough times. And one more important thing here is that your trading strategy also depends on how much money you have in your trading account. You may have a good trading strategy already, but if you don't have excess money in your trading account, having few losses through your trading strategy, right, it may stop you out from trading anymore. Okay, a lot of people, or no, a lot of you, I believe you have your own trading strategy, right? But somehow your trading strategy may have a few losses, and then it stops you out from trading, and you're out of the market. You are unable to trade anymore. So this is where money management is very important. Having sufficient money or more than sufficient money in your trading account so that you are able to see how your trading strategy actually works. Because when there are really good trading opportunities that your trading strategy signals you, if you don't have the capital to take advantage from the market and profit from it, then you may not be able to see the whole cycle of whether your trading strategy works or not in different market conditions. So it's always a best practice to trade with more money than less money, okay? And also do only trade money that you can afford to lose. Never ever borrow money to trade. Never ever use money that you cannot lose in trading that actually affect your daily lives. Now, the last thing would be on, of course, the biggest challenge in trading is that if you don't have 1 to 4, don't talk about trading discipline. Okay, trading discipline, if you want to talk about trading discipline, always you need to complete number 1 until number 4 first. Then only you talk about this trading discipline. Okay, especially this is important, especially when you are not making money or having trading losses. Majority of the traders don't know how to deal with trading losses, and their emotions they don't know how to deal with their emotions effectively, and then they started to sway away from their trading plan. They do many silly things that cause greater mistakes in trading later on. So for example, when you face losses, a lot of traders starting to trade excessively or trade too big with a hope to recover all of your previous losses, right? This is very, very too aggressive and taking a lot of unnecessary risk. So if you don't have risk management in hand there, you may be violating your own trading rule. And sometimes traders may also lose hope and get clueless in what to do in trading anymore. So they started to listen to trading tips or subscribe to trading signals related stuff, and doing things that can prevent. If you do all of these things right, those are actually poor practices and poor habits in trading. So if you do do all of these poor practices, it can actually prevent your growth as a trader. So remember, stop. If you're still doing or committing poor practices in trading, you need to start reducing all of those bad practice, and best eliminate all of those bad practices, and put in a little bit time and effort to build and develop a good strategy, backtest it, have a risk management as well as money management. Now, the last topic, now we are going to put all of those minor pieces together to have a look and see your trading as a whole. Here, I'm going to share with you some suggestions on how you can put all of those pieces together to make your trading method more robust and workable in trading. Now, of course, number one thing that you need to know is that trading is like running any business. It's a long run game, and it's okay to lose money temporarily. Most importantly, it's never ever to blow up your trading account and make sure you are still in the game. So early on the slide, I have already shared with you why cut loss is important. It's okay to have losses, but most importantly, you need to make sure that your trading account still have money to let you stay in the game. The next thing is that you need to have a continuous improvement. You need to read more, learn more, and improve your knowledge and skills in trading, and do the necessary homework like developing your trading strategy. Know what is your criteria for trading, what is your criteria for entering as well as exiting the market. Practice trading discipline by going through your checklist each and every time you trade, or whenever you feel itchy or have the temptation to trade. Follow your trading checklist. Develop your deep understanding of the market, because for example if you're running a restaurant business, you also need to understand the food and beverages market very well, right? You need to understand what is your area, your F&B area doing, your customer demand, and etc. So same thing goes for trading. You need to understand the market a little bit well as you continue to trade. And lastly, you need to definitely learn how to deal with tough times. I believe a lot of you, you may have some thought of, starting your own business, being self-employed, doing business, or whether, working for a company. Regardless of anything that you do, even including a business, trading, there will be definitely tough times, okay? There are times when business are not doing well. For example, during COVID lockdown, many businesses are affected. In running a business, you need to manage your risk. You need to have excess capital in sustaining a business. And again, this applies to trading as well, right? You need to learn how to cut your losses short, deal with the frustrations, the emotions of facing losses, and have excess capital in your trading account so that you can survive in the market if your trading strategy does not work in the short run. Now again, how to develop an effective approach in trading is that we can come back to these 5 key components. A complete trading method that I've shared with you earlier. So number one thing, develop your knowledge in research and analysis, regardless of fundamental analysis and technical analysis. And the next thing you need to have after you have the knowledge of fundamental analysis or technical analysis is that you need to start to develop trading strategy. It doesn't have to be a complicated strategy. The trading strategy, as you know, is like a navigation system to tell you where to go, where to buy, and where to sell. Okay, the simpler the better, because with a good simple navigation system, you know exactly what to do quickly. But if your navigation is too complex, that it takes too much time for you to think, to ponder and reconsider again, then I urge you to actually simplify your trading strategy. The next thing, after you have a trading strategy, you need to have a risk management plan to save yourself in case you lose money in trading. So all of you, I believe you know that cut loss is important to protect your capital and survive in the market. So you need to be able to manage your risk. Even though you don't like it, you still need, in fact, risk management is something that you still need to follow it, even though you don't like it, okay? Number 4, you need to have money management. You cannot trade with too little money because too little money is like, flying a plane with too little fuel. It's always good to have excess money that you can afford to lose so that you can have enough capital to take advantage of the market when the time is right. Okay, a lot of times trading strategy, if you have a well tested trading strategy, usually it's fine. It's okay to use moving forward. What it lacks is that you don't have enough money to support your trading strategy. Okay, and lastly, of course, it's you. You are the pilot of the plane. You are the CEO of trading. You make the decisions. So it's important for you to be aware and watch your trading psychology and manage your emotions well. So although these 5 things seem simple, but these are in fact the critical components you must have in your trading. You can go into greater depth and study a little bit more in each and every of these 5 components to improve your trading. Each and every of these areas have rooms for improvement. So do understand this. It takes time for you to learn, and perfection takes time, and be patient with yourself throughout your trading journey. Now, one last thing before I end is that, sometimes there's nothing wrong with your trading strategy or your trading psychology. Then it can be maybe because of this problem where you try to get a fish in the wrong pond. Now, majority of the traders who come to the futures market have some experience in stock trading, right? So you may be familiar with in the index futures, so which is why you prefer to trade FKLI. So please don't forget that Bursa Derivative Malaysia have other derivatives products as well. We have FM70, we have FCPO, FEPO, and FGLD. So FKLI and FM70 are index futures, so we actually closely follow the stock market. They have the similar characteristics with stocks, while the FCPO, FEPO, even FGLD are the commodity futures. It's completely different asset class from stocks. Well, whatever or whether the stock market goes up or down, it has little impact on the FCPO market. So give yourself opportunity to explore into other derivative products as well. So if you haven't tried before, okay? Now, let me wrap up this session. 4 key takeaways is that I've shared with you the 5 key components of your trading strategy. The 3 key decisions in trading. You need to know whether to enter, exit, or even do nothing. Most important is only these 3 key decisions only. And I've shared with you several tips of how to solve your challenges and obstacles in trading. And lastly, the 5 areas to improve your trading. You can refer back to your 5 key components to see which of these areas can improve on, which of these areas that you lack of it, so that you can find ways to learn and fill in the missing piece of your puzzle. Okay, so that's it for today. And of course, again, good trading psychology begins with right education and knowledge. So it's not so much about managing your emotions yet, but the first thing that you need to have is actually first develop knowledge as well as having the right education, so that it's easier for you to have a good start in trading. Okay,